47 million people are mining crypto on their phones right now. No hardware, no electricity bills. And tomorrow marks the one-year anniversary of Pi Network's mainnet launch. Pi just surged 40% in a week. Kraken added it to their 2026 listing roadmap. And the team is about to make major announcements. Today, we're breaking down what Pi Network actually is, why it's pumping before the anniversary, and whether this tradable token has real value beyond the mining gimmick. Pi Network is probably the most controversial project in crypto right now. Some people call it the future of accessible cryptocurrency. Others think it's a massive pyramid scheme. Let's look at what it actually does. Pi launched in 2019 by two Stanford PhDs, Dr. Nicholas Kokkalis and Dr. Cheng-Diao Fan. Their pitch was simple. Make crypto mining accessible to everyone by letting you do it on your phone. No expensive mining rigs, no massive electricity costs. Just download an app and tap a button once a day. But let's be clear about something up front. The mining part is essentially a user acquisition strategy. You're not going to get rich tapping a button on your phone. If you're lucky, you'll offset the electricity cost of charging your phone. What matters is the actual tradable token, and whether the ecosystem they're building has real utility. You open the Pi app, hit the mining button, and you're earning Pi tokens. The mining isn't real proof of work like Bitcoin. You're essentially checking in daily to prove you're an active user. Your mining rate increases when you invite friends, which is where the pyramid scheme accusations come from. Pi has over 47 million users. That's massive. The question is whether these people are just tapping buttons or actually using Pi as a currency. The project went through multiple phases. It started as a closed testnet where you could mine but couldn't trade your tokens. Then on February 20th, 2025, exactly 1 year ago tomorrow, they launched mainnet and transitioned to the open network. This is when Pi became an actual tradable asset rather than just numbers in an app. The ecosystem includes the Pi browser for decentralized apps, the Pi wallet for transactions, and they claim 27,000 sellers across 160 countries accepting Pi for goods and services. If this merchant network is real and growing, that's where the token gets actual value. A big focus is KYC compliance with strict one-account-per-person rules. Recently, they added palm print verification and AI-assisted validation. This matters because it affects how many tokens are actually eligible to be traded. Under the hood, Pi is aligning with the Stellar Protocol for Scalability. They're positioning themselves as a medium of exchange for everyday transactions, rather than a speculative asset like Bitcoin. The real question isn't about mining rewards. It's whether Pi can function as a legitimate payment network with enough merchants, users, and liquidity to sustain a tradable market. So why is Pi pumping right now? Tomorrow, February 20th, marks the one-year anniversary of mainnet launch. The community is expecting major announcements. First, there's talk about launching the Pi DEX, a decentralized exchange, in Q1 2026. A native DEX would give Pi holders a place to trade without relying on centralized exchanges. More liquidity venues mean better price discovery. Second, Kraken added Pi to their 2026 listing roadmap. They already offer futures trading, but a spot listing where you can buy and hold real Pi would be huge, especially in the US market. Third, the team just pushed mandatory node upgrades with a February 15th deadline. They're moving through protocol upgrades rapidly, with versions 19 through 23 planned for Q1 and Q2. The price action reflects this anticipation. Pi is up 40 to 50% over the past week, rebounded 38 to 50% from its year-to-date low around 13 cents. Volume spiked to $22 to $23 million daily. What's interesting is Pi is outperforming Bitcoin and Ethereum year-to-date. Pi is down 12% from January highs, while Bitcoin is down 23%. That relative strength suggests traders are specifically buying Pi in anticipation of these catalysts. OKX is genuinely one of the more solid exchanges out there. Good security, deep liquidity, and it doesn't randomly fall apart when markets get crazy. It's consistently ranked near the top. Fees are competitive, and withdrawals actually work when you need them. Plus, there's up to 100 euros for signing up and up to 200 euros for referrals, so you're literally getting paid to try it. No gimmicks, just a platform that does its job. Let's talk numbers. Where could Pi realistically go? Right now, PI is trading between 17 and 18 cents, seeing some immediate dropping as of this moment. The all-time high was $2.99 back in February 2025, right after mainnet launch. So we're down about 94% from that peak. Short-term resistance is at 19.1 cents, then 20.5 cents. If the anniversary announcements deliver and we break through 20 cents, the psychological target becomes 25 cents. That's about a 30 to 35% move from current levels. Medium-term outlook for 2026. Analysts are forecasting Pi could reach 23 to 34 cents by year-end, which represents 25 to 85% gains. The more optimistic scenarios put it at 50 cents if ecosystem adoption really takes off. The key variables are whether the Pi DEX launches with real liquidity, whether major exchanges list spot trading, and whether the merchant ecosystem grows. It's also entirely possible that this week has been a fluke, and Pi's price soon resumes its downward trend. Caution here is absolutely mandatory. The wildcard is token unlocks. Pi has a max supply of 100 billion tokens, but only 9 billion are circulating right now. That's 9% of total supply. The foundation controls about 90% of all tokens, which is massive centralization risk. In 2026 alone, there are 1.3 billion tokens scheduled to unlock. February had 137 million unlock. That's constant selling pressure unless demand can absorb it. The fact that Pi is pumping despite unlocks is actually a good sign for short-term trading, but if buying pressure dries up, those unlocks will crush the price. Here are the risks you absolutely need to understand before trading this token. First, token dilution. 91% of total supply is still locked or not circulating. The foundation holding 90% of supply means they control the market. If they decide to sell or if insiders dump, retail traders get wrecked. Second, centralization. A foundation controlling 90% of supply can dump on the market or make decisions that hurt token holders. You're trusting the Stanford PhDs completely. And finally, the perception problem. The referral-based mining structure and years of not being tradable created massive skepticism. That perception could limit institutional adoption or exchange listings. Pi Network is a fascinating experiment. You've got 47 million users, a one-year mainnet track record, and tomorrow's anniversary could bring real catalysts like exchange listings or the Pi DEX launch. But let's be real. The mining part is just distribution. The actual value is in whether Pi works as a tradable token with real utility and liquidity. The risks are substantial. Token unlocks, centralization, and adoption uncertainty make this a speculative trade at best. If you found this breakdown helpful, hit that like button and subscribe for more crypto deep dives. And remember, do your own research, understand the risks, and never invest more than you can afford to lose. See you in the next one.